Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back to the White Rabbit. Let's have a look at a few charts. First, we start with the higher time frame, the weekly. Here we've seen a nice bounce from the support area. However, this bounce was not a full reversal, and for now, price is moving down again. What I had marked out was the weekly wick, mainly the 50% level of that wick, because very often we see part of a wick getting filled. Not always, and not always exactly 50%. Sometimes less, sometimes the full wick. But the first logical level to watch is usually the 50%, especially if other levels align there. On this chart, the SR level where the bounce happened aligns with the 50% of the wick. That gives us a good area for confluence, around 65K and slightly below. Since price is currently in the bottoming time window of the 2-on-2-day cycle, I can assume that if price neither breaks down nor breaks up, we might see a range here. That's not the only reason for expecting a range, but it's part of the context. If price doesn't break up or down, then logically we range for some time. To break down, price would need to lose the last low. Even then, we would start moving into some interesting levels below, which I mentioned in the previous videos. If you haven't watched them, make sure to check them out. To the upside, I would say price needs to reclaim this current area first. Then we can look for higher targets step by step. On weekly momentum, we can see that for it to cross up, we would need a move above 69K, so more or less this upper area. If I see the weekly candle closing above that, there's a high chance we see a move higher. Until then, it's local resistance, and we go step by step. That means, on longs, I look for some take profits there. On shorts, I also manage around that level. Same logic to the downside. I take profits on shorts and consider longs at support. On the 3-day time frame, momentum is also near the lows and needs a close above 73K. Again, that's this upper area. So we can clearly see this is an important local area. Once reclaimed, we can look toward the next levels. Until then, it's resistance. Whether you trade it or not, and whether you have a setup there or not, is another story. If there are setups for me, I always try to update my plan and execution in Telegram when I take trades. Because drawing on a chart is useless if I don't show the execution part. You can have very complex drawings, but if you don't know how to execute and no one shows you, then the chart is just information, more or less useless. Not many people show that, because most build their business by not showing losses. And if you never see the execution and management side, you stay forever in the learning phase. You don't fully understand how to apply what people are showing. That's what I try to do, show the reality. And reality includes losses, sometimes small, sometimes big. Plans need to be adjusted. Take profit levels people tell you to aim for won't always get hit. Yet many say, always aim strictly for 2R, use a fixed stop loss, fixed TP percentages. That's nonsense. That's not how the market works in reality. It's a nice picture people sell. And then they wonder why they're still not profitable. They follow fixed SL, fixed TP rules, and still lose. Ask yourself why. Because it's not reality. If you watch people who don't share executions in management, you'll notice it's always more or less fixed on the chart. Because they're charting, not trading. And if they do trade, their management is often very different from what they teach. Compare that to people who actually show executions. You'll see the difference. Anyway, moving forward. On the higher time frame, we currently have these two areas where we expect a range until proven otherwise. If price moves outside of this area, then we look for the next levels accordingly. Next chart. Here I have the monthly statistics. Like every month, we mark the key levels on the chart and define the time windows for potential highs and lows. This month, the average bearish move has already been hit and even exceeded slightly. But for now, I'm more interested in the time aspect for the lows and highs. For the monthly low, the averages are around 8 days in bullish months, around 11 days on average overall, around 15 days in bearish downtrends. The overall average of 11 days has already been reached. That means only the 15-day average remains, which technically keeps the window open for a new low. It doesn't have to happen, but statistically the time window is still active. Personally, I like this low so far. But stats are stats. Technically, I would need to wait before saying there's now a higher probability that this level holds as the monthly low. If price takes it out, we need to watch carefully what happens. An SFP would be fine. But if we see a close below this level outside the average time window, then what usually follows is continuation to the downside. With that said, if this week does not make a new low, then we can say the monthly low is likely in, of course with the invalidation level I mentioned before. For the monthly high, we still have a few days left, but not much, basically this week. So a new high is still possible within this time window. The same principle applies. If price makes a high and then retraces, we can assume the monthly high is in, unless it starts making new highs after the average time window has passed, which could lead to higher prices, similar to how extended moves work to the downside. The other scenario is that we simply spend more time here. If the average time passes without a breakout, then my range idea could extend further. We might see this whole month trade inside the range and only next month see a move outside of it. That would align closely with our next lunar timing window and the 202-day cycle date that I marked out. And that's not the only time confluence we have there. With that, we now switch to the yearly time price chart, which I updated yesterday. This is the yearly price time chart. Here we have the key time windows and price levels, which we will adjust only if we see a new yearly high or a new yearly low. Until then, these remain the active levels, including the deviation levels if needed. What I wanted to focus on here is the next yearly Fibonacci time window, which falls on February 23rd, and the following one near the end of March. This time area overlaps with the 202-day cycle window, which makes it particularly interesting. When price meets time, we often see some kind of reaction or even a reversal. Last time, price was rising into this time window. As soon as it was reached, we saw a drop followed by a sideways move. This time, price is coming down into the time area. That means a range here is possible, but it's also a potential reversal zone, unless we start to see key levels breaking down. That would be new information to work with. The next price levels to watch on this chart are Mani 65.5K. Then the area around 63K, 62K. These levels align nicely with our regular structure levels. That's where I would start looking for longs again on the lower time frames, and here I mean leverage longs. I've already bought spot, and many rabbit box limits were filled as well, but in this zone, I would look to trade leverage again. The next chart I want to look at is USDTD. Here, I don't want to focus on the levels themselves, but rather on a setup, the rabbit box setup that has triggered quite a few times in history. Now, this does not automatically mean that price will come all the way back to the exact level on the Bitcoin chart. If you look back, you can see that some levels were never touched again after the trigger. To be fair, that happened a few times in the 2015-2016 cycle. After that, however, we saw 6 times in a row where the levels were eventually retested once the rabbit box setup triggered on the USDT chart. The last 2 times, though, we have not seen a retest of those levels, at least not yet. The previous time this setup triggered, it was more or less at the start of the bull market, and then again at the higher low around 28K. Now, price is at 66K, and USDT dominance has already reached the same levels where back then Bitcoin was trading around 28K. For some reason, this setup shows a 97% hit rate. I honestly don't see many losing examples in the data, which is interesting. That said, it doesn't guarantee that Bitcoin price will revisit the exact same levels where the setup was triggered. What we can do going forward is simply keep an eye on this setup on USDT dominance. We know it has a high probability of reaching its targets, as you can see on the chart. But that doesn't always translate one-to-one into Bitcoin hitting the exact same price levels as before. So for now, it's less useful as a precise price target tool, more like 50-50 in terms of exact level revisits. However, it tells us that at some point, we are likely to return to this dominance area again. I don't use this setup much on other charts. It works best for me on Bitcoin-related charts. but it's something we'll continue to observe and evaluate over time to see whether it becomes useful for projecting potential price targets. With that, we switch to the local levels. That was some scribbling from yesterday, just as a quick look back. I was watching the Monday range high and low. We had a local level there, and I mentioned that if someone wanted a scalp, that level would be a good one, targeting the daily open range, which price hit exactly yesterday. Personally, I wasn't interested in opening new trades. I was only holding the long from lower and the short, with the idea of a potential range. Price has been slowly grinding down and has now lost the Monday low. However, it's important to note that we have not seen a daily close below that level yet. So technically, this could still be a deviation, with price moving back inside the Monday range. So what are we looking for locally? Right now, price is losing this area and hitting the next support. For a local sign of strength, we would like to see price move back into the range, and ideally break above today's open range, which is the first hourly candle of the day. If that happens and the retest holds, then we can aim for the next higher levels. On the other hand, if we see a bounce today but price gets rejected at the Monday low, or sweeps into the daily open range, tests or SFPs it, and then drops back below the Monday low, that would open the door for a move lower toward the next short targets and a new area for longs. Of course, price can bounce from here, but I don't want to open a long at this level. I prefer it a bit lower. And if that doesn't happen, I simply stay in the first long and wait for the next better setup. So for now, what we have is local support. I personally just took profit on the short here. The next key area is the Monday low and today's open range. That's the local SR level to watch for weakness, like a retest or SFP and then losing the Monday low again, or strength by reclaiming this area. If reclaimed, I would aim at least toward the average daily gain and the highs on the left. This is just an update of what I'm looking for, purely for educational purposes. I'm not trading anything new here. I'm just showing the process that keeps repeating. Lower down, we have a better area for longs. The overall invalidation would be closer there, but the risk is that price may not move down to that level. In that case, I don't force anything. I simply wait and see if we get signals here. If not, I continue to wait. The levels are the same for everyone, but our decisions and management are different. Some might trade these moves inside this area, or the retest, or the reclaim. There are many setups, but you have to decide which one fits you and how you want to manage it. For me, I prefer entries as close as possible to the extremes. Often, I ladder into a position instead of using full size on the first entry. That allows me to stay flexible, either to add to the position or to close it with a smaller loss if there is no strength after the compound levels are hit. That's the small update for today. If I take action, I'll update in Telegram as always, and then give a recap in the next video. For reference, locally this area will be key. For longs, I would prefer it a bit lower, where I would take more profit on the short. If that doesn't happen, I'll simply stay in the current long and adjust the plan if needed as time passes. With that said, I hope this was helpful. If you want to know more, you're always welcome to join the Telegram. Stay safe and see you in the next one.